What's going on, everybody? Welcome back to my YouTube channel. So for today's session, we're just going to go over 10 pairs that we could be studying for next week and just look at what the market is doing, try and get an overall consensus, and just look at some of the ideas we could be thinking about moving into next week. So the 10 pairs we're going to be looking at is Euro USD, USD JPY, New Zealand dollar CAD, Pound USD, Aussie dollar USD, Pound Yen, Euro Pound, CAD Swiss Franc, Euro Yen, and USD Swiss Franc. I just want to say before I start, what I'm about to tell you now is of my own opinion. This is not financial advice. And if you do decide to take on some of the analysis that you're looking at today, just make sure that you're not risking money you can't afford to lose. So Euro USD on the 4H timeframe, what can we see on this structure? Well, you can clearly see that the market isn't really trending in a nice directional bias. We can see that the market is ranging and moving sideways. What I first identify here is the structural high that was formed that has still not been taken out, and the structural low that was formed that's still not taken out. Now, when it comes to ranges, we can look at this as a big range, but as intraday traders, we do want to get involved in the markets. So sometimes waiting for the market to get back to these major highs here and waiting for the market to get back to some of these major lows here could take some time. So we can use another approach when looking at this, and that's identifying the structure on the intraday time frame and coupling that with momentum, meaning we can identify what the market is doing for today using the previous day's data to identify what's happening. Now we can see here on the 17th, so that was on Thursday, the market's made a new structural high, which was within this range. As you can clearly see here, this high was never taken out on the 18th and on the 19th. Just make sure we're right here. Sorry, on the 17th and the 18th. Okay, so the price never made that new high. Now, usually what you will find is if the market is ranging and bouncing from, the ceiling to floor or whatever you want to call it, high and low, usually you will see a completion of this move from the low back to the high. And as you can see here, this was the previous day's high on the 16th, which was Wednesday. It was unable to break that, and it did attempt to try to push to the upside on this day quite a few times and actually failing to do so. After the market decided to, close out on Friday, let's just make sure we're correct here, which was the 18th. Yep. You can see we had a really strong bearish candle to the downside. Now, if we couple this information with the fact that in a range we usually bounce from ceiling to floor, usually what you will see, or floor to ceiling, what you'll usually see is a completion of this move back to the upside. The previous day on the 17th, we never broke the new high. We never took out the high. We continued this move to the downside. Then you can see here on Friday, we were ultimately or really struggling to break this high. That's a lot of information to take on board. And when we, let's get this back here. When we take this behavior and how the structure is built on this market, what we can now do is go down to, let's say, our lower time frames and see the behavior. Now, as an intraday trader, what we're going to be looking at here is how the market is moving in terms of its trend on the hourly time frame. So you can see here, we're trending to the downside for a very long period of time. Now, this may not mean a lot to you, and obviously if the higher time frames are pushing to the upside from this range and bouncing up and down, then, you might say to yourself, well, okay, if this is trending down, then we should only be looking for selling opportunities. Well, that's very true. But until a key level comes into play, which is this structural low here, you can't really look to sell once the market gets down to these lows. You have to wait for the market to create that low high formation, break this structure, and then finally retest it when it's ready to do so. So if we were looking for continuation sells outside of these two key levels, then you're looking for the market to break this structure and then come back and retest, which it never did. So with the behavior of the market breaking this trend line, meaning that any sell you took below this trend line or this key level, I like to call it a brick wall because I don't use trend lines. I mean, I think that they're very subjective and they're drawn to meet a trader's needs however they want to draw it on. But let's just say now you wanted to sell this market, and just a little tip here for you to think about going forward with your trading next week. Let's say you wanted to sell the market here. Now, I know it's a random sell, and most people wouldn't be selling like this. But I personally believe, risk reward ratio is the most important factor when it comes to trading, coupled with risk management and obviously a strategy that has a positive outcome or results. But if you took a sell here and you decided to place your stop loss outside of this trend line, look what would have happened with this trade. You would have been in a good position, and I know the risk reward ratio is off here, so don't shoot me, right? I'm just trying to give you some ideas of how you could be doing this. But let's say your stop loss was outside of this brick wall. Look here, and you was targeting this low. No matter what happened whilst price was below this trend line, you would have won this trade. Let's make this even better, because this was extreme, but this was to highlight a point outside the trend line, right? Or the brick wall. Let's say you decided to sell here and you decided to put your stop loss above this brick wall. What's the theory behind this? Well, as long as price trades below this level as an intraday trader, then in theory, price should not break this brick wall and should continue down in the direction that the trend is going, which is down. And look here. And this is a simple strategy. I mean, I've just given this to you off the whim, but this is a simple strategy / concept you can be thinking about when taking your next trades. And look here. 1 to 2.17 risk reward ratio, back down to the key level in the market where price reacted to before, and now we see the rally off. Okay, so I kind of digressed there, but anyway, I hope you get the point, and I think it's useful information that you should be thinking about going into your trading next week, so you're not rushing into trades that you really shouldn't be a part of. But we had this bounce off at this key level. Okay, this is the consolidation range, whatever you want to call it, that the price is forming on the higher time frames. This was the previous day's high in the 16th. You can see we attempted to come back to that level, and we failed, and we failed, and we failed. Now, what do I gather moving forward to next week? And this probably will only last for 24 to 48 hours, because you should be redoing your analysis every single morning. But price made a new high after this trend to the upside. Then we can see price attempted to break it and failed. Then price attempted to break it again and failed. Now we have a confluence here, or multiple confluences. Key level broken, brick wall violated, meaning that once price breaks this, sell bias is not or should not be an option at this moment in time until price creates new structure. We now have a trend to the upside. We have now price indicating to us a potential bullish formation. We can see price is attempting to break it, and price is attempting to break the previous high on the 16th. So we have a lot of bullish evidence here. But now what happens next? Price fails. Now that, in terms of understanding this in terms of behavior, is there's a significant amount of sell pressure at this moment in time with all the added confluence that we got. So what would be my plans moving into next week, at least for Monday / Tuesday? Well, I know that this is the major low off of this structure. I know this is the major high off of this structure. Price is failing to break it, and at the same time, we closed on Friday with a very strong bearish indication that price is failing to break these highs, and now we're starting this move down. So I can take this information and say, well, my plan moving into Monday / Tuesday is this. There is a lot of evidence signifying to me that price is failing or to maintain that bullish pressure. What I'd want to see is that if buyers are in the markets, I want to see an area where price could potentially take out some stops and continue to see liquidity build up for this sell buy structure that's forming, and then look for sells. So how would I do this? Well, I'll just simply wait for the market to take out these lows. I know that there's a strong chance that buyers are in the market, probably looking for that higher low with stop loss in and around these levels. And if they get taken out, then there'll be a lot of liquidity that's being picked up. And then I could look for some potential retests and then maintain this structure of this market that will then form a trend to the upside. So remember, any buyers above this level, you could buy. Once price violates it, creates evidence of a key level being respected, and then the momentum shift indicate that bearish sentiment, stocks being hunted, retest, only entering trades on pullbacks, then that will give me a good opportunity to say, well, look, if I enter this trade, there's a high chance price will get back down to some of these structural lows next week. stop loss above the key level if respected, or above the high, and then look for some trading opportunities. So that's how I break down my analysis based on structure and behavior, key levels, and then planning my trade in order to look for a good setup with a high probability of winning. So that's Euro USD. Now, again, this is not a signal. This is just of my own opinion. And to some of you, this may not even make sense. But this is how I see the markets, and this is how I prefer to go about trading it. Now, looking at the time, we just spent 10 minutes on this analysis. So I doubt very much so we're going to get through 10 pairs. But let's just keep going. We'll try and switch it up with a few different pairs. USD JPY. So taking a look at this structure on the 4H time frame, I mean, this is pretty simple, right? We can clearly see that the market is trending to the downside. We're making lower highs, we're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Now, this is how you want to be trading, really. When the market is trending, this is what you want to be involved in. But the market doesn't always create structure like this. So looking at the formation of this market, what's some very important factors to consider? Well, if you're planning to continue selling this market, understand that you have a previous day low. So when the market opens, this will be the low. You also have a previous day high. So this is the structure here that you'll be looking at. So this is the lower high formation. We'll then also be taking into consideration the fact that any sell below this brick wall here, you would have been absolutely fine to sell with a stop loss above this brick wall / trend line. And now we need to make a plan of how we're going to take this trade. The previous day's low was taken out. And as you can see, there's been a continuation of that structure to the downside. So we have a new low. Now what we want to do, if the market is self-biased, is enter this market once the market creates some sort of pullback or a retracement, whatever you want to call it. From a 4H time perspective, if I'm looking at this, I'd want price to stay below this major lower high. So my first plan of action could be to wait for price to come back to show us some sort of reaction at this level to see if the market will create some sort of double top pattern, see if we get some wick rejections after this pullback, then look for that continuation. Or my second plan of action would be to see if price reacts to a previous level in the market. So I'm looking around a 50% retracement of this leg to see if the market will create some sort of wick rejections. Now we do start to see that wick rejection forming here, which means that if we give ourselves a little bit of breathing room, we would still be below this brick wall / trend line. We'll see the rejections at a key level where price has reacted to before. We'd have the pullback as a confluence, and then we can look for some trades using this range from where we suspect the market may pull back down to some of these lows, which is 36 pips. Now, UJ has a very small range, so you might be thinking, well, that's not a lot of pips, but I'll be brutally honest with you. If you manage to get into a trade up and around these levels with a limit order entry or a very nice, let's say, pin bar engulfing candle, you can comfortably put your stop loss above this brick wall, above the key level, and target some of these lows. Now, the whole aim when taking a trade, or should be your thought process, is not how quickly I can win this trade, but how I can manage this trade to potentially break even / partials taken off, or however you trade. So let's imagine this price comes back, you get a sell limit, or you get a stop order, you get an instant execution. By the time price starts to push back down, you have almost a 2.5 to 1 risk reward ratio. By the time price gets back down to this level, you can lock this in at break even. You'll be risk free on this trade. You can either take off some partials down here, and then if you're targeting a 1 to 3, because that's what I like to target, then you'll have the assurance that you can lock this in. And if price is going to continue with a trend on the higher time frame, which is a 4H, you will see this lower low being made. And if this lower low has been made, then guess what will happen? You'll hit your take profit. So this will be one of my plans for USD JPY. Again, this stands for about 24 to 48 hours. But, you know, and the reason for that is because the markets can do real random things, right? It can open up from today and it could rally to the upside. It could gap all the way up here. It could do a whole heap of rubbish. You could have a strong push to the upside, a breakout, a break back in. But what you have to understand is what I'm concerned about is my plan of action, not what the market is doing. If the market follows the plan of action that I would like to see it develop based on past history and based on my strategy, then that's when I will jump into a trade or look for a trading opportunity. But if the market does something random and decides to do this, that, and whatever else, then guess what? I don't care. I'm just going to move on to another analysis, or I'm going to dissect the markets again and start to look at momentum and behavior. And then I'll drop down to my lower time frames, maybe my 15-minute, 5-minute, or even my 1 minute. And then guess what? I use the same concepts and strategies that I use throughout, which are consistent to my plan. And I'll just trade an intraday trade or potential scalp trade. And I'll just risk the same amount that I normally do, 0.5%, 1%, 2% per trade. And the rewards will always be the same, because remember, pips lie, percentage doesn't. So yeah, listen guys, if this doesn't play, it doesn't. We move on. New analysis, new day. Okay. And remember, you don't have to be trading every single day. I mean, I don't understand what's wrong with people sometimes, but you don't have to be trading every day. 2 trades a week is absolutely perfect. 1 win, 1 loss. Continue to do that consistently, risking 1%, 2% per trade. Let me not encourage 2%, but say 0.5% or 1% per trade. You're risking 1 to 3. You know, you win 1, lose 1. You know, you take 2 hours a week, 8 hours a month, compound that over a year, because patience is what it's about, and you're laughing. Do you understand? You're laughing. And that's just being very conservative, you know? So if the analysis doesn't play out, then move on. Now, looking at New Zealand dollar CAD, I mean, look, the first things I can see on this market is that New Zealand dollar is clearly strong. Now, it's either that the New Zealand dollar is strong or the CAD is weak, right? But regardless, the first thing that we should be thinking when we're looking at this is it's really bullish. The trend is bullish, and there's not a lot of evidence to support that the market is reversing. Now, I can see already from this time frame there are scaling down opportunities here that we could take advantage of as an intraday trader. Looking at the structure of this market, the first things I want to observe was the previous day's high. Now, as you can see here, the previous day's high was not taken out, and the market really struggled to break above this level. So no new highs were taken out. Now, we can know that when the market creates an uptrend, we have higher highs and higher lows. Now, let's say that this was identified by retail traders as a higher low, expecting a new higher high. If we scale down to the hourly time frame, and these traders decided that they were looking for an opportunity, let's say in and around this level. So first things first, you'd have your higher low traders, then you have your double bottom pattern traders, then you'll have your engulfing candle traders, and whatever else. Now, I know that a lot of you don't use really tight stop losses, but let's say you manage to get into this trade and you place your stop loss, let's say below this level here. So let's remove this. Let's find this wick here. So yeah, let's say that. Now, obviously, I have drawn this to highlight a point so that this does actually get stopped out. But let's think about this from a behavioral perspective, right? So you've taken this trade as a buying opportunity, higher low potential, whatever, may have been stopped out. And this would have been during the New York session. You re-entered during the New York session, and then look what happens. You target your highs, or you target your 1 to 3s or your 1 to 2s, whatever it is. Let's just keep it real simple, because these are the principles you need to be thinking about, not the exacts. Okay, take the trade. You know, this is a key level, so more often than not, this will be break even. Okay, but let's say you didn't put it at break even, you had your stop loss below this level because this was a significant key level. This was the market breaking out and breaking back in. You decided to go with this trade once the market creates some sort of momentum. Now, we know the trend on the 4H is up, meaning bull bias, right? We also know that price was failing to break above this high, which is a sign, but not a major sign, just a sign, because price is allowed to, you know, stick at a level for a period of time, as you can see here, before then deciding that it wants to continue with the rally up. But look what we have here. We have a change of behavior. We don't only have price failing to break above this structure, but we also have an area where the market has literally obliterated this key level, potentially smashed some stop losses, and potentially now what we could see is one or two things: a continuation up with that liquidity, or a liquidity grab to then see the market continue this rally down, looking for the retest and that continuation. Now, I know based on my experience, when we have price violating structure like this, especially as an intraday trader, that this structure here in itself creates trends. So if I'm looking at the 5-minute time frame, what you'll identify here is that the overall consensus of this market is scaling down, is that what is happening? The trend is down. So if I'm trading on an intraday time frame, then what I'm observing here on the lower time frames, just from that 1/4H candle, is that the trend was up. We now see that the brick wall has been violated, and on the way down, what are we making? Lower lows and lower highs. Now, price has taken out this previous low, and also on the 4H time frame, look what you see happening here. The previous day's higher low was taken out by this big bullish candle. So using all of that data, behavior, and structure, to me, the plan of action that I would want to follow through with next week, let's clear this up, at least for 24 to 48 hours, please remember this, okay, is to see this continuation of this bearish pressure to the downside, and then look for a retest of a key level, which will then potentially form the structure that I'm looking for, which is a high, lower low, lower high continuation. Now, again, if this doesn't plan out, and this is a stop hunt, stop grab, whatever you want to call it, and then this rally continues up, then all well and good. But I know that personally, if this breaks back into consolidation, in theory, we're just in a consolidation. And if I take any buys, then I have to fear that this level won't get broken. So I have to be careful of my range. I prefer to trade clean price action with the markets that are trending. So a nice break, close, retest, continuation of this structure would be absolutely perfect. So that's my analysis on New Zealand dollar CAD. Let's move on. So pound USD, looking at the structure of this market, what can we see? Well, I mean, this looks a lot like Euro USD, right? We're just consolidating. But there's some very important things that you can take a look at here. Now, this was the previous day, again, from the 16th high that was failing to break. Meaning that, is the dollar strengthening again, or is the pound weakening, or is it just time for the market to continue the overall consensus of this structure, which is, as you can see, down? So if we pause for a bit, what's happening? Well, to be honest with you, I'm not in the markets to start dissecting what's happening all the way over there to the left, but I want to understand the behavior of the market today. So going into Monday, my thoughts would be that, first evidence is this. We're failing to break and make new highs. The previous day's high all the way from Wednesday was not able to be broken. Then immediately what we had here is we had a really strong push to the downside. Now, the question is, have we taken out the previous day's low? Well, no. But could this be a target for those that were potentially looking for these sells at these highs, against the buyers who were buying this market? And now, obviously, the liquidity has built into this structure, and there's a lot of evidence to say the sellers in this market. Could we continue this rally to the downside, at least back to some of these lows? Well, I personally believe we can. There is no supporting evidence here to suggest that the market should come back to these highs. If we're forming a range will bounce from ceiling to roof, which means this should be our target. Secondly, if we're failing to break these highs after this strong push to the upside, then, that's another sign and another confluence. And if we're not taking out the previous day's high, which, in theory, what the banks want to do is take out new highs so they can build up the liquidity, then where should the market go? It only makes sense that it's going down. So how would I dissect this? Well, first things first, what I want to identify is where was the level in this market where price was failing to break? And you can clearly see here, this was the level. Multiple wick rejections, price attempted to break and failed. And then all of a sudden, we had this strong rally to the downside. Now, this could be news inflicted, this could be whatever. But again, the plan of action is to create a plan that falls in line with your strategy and approach. So even if this was news and there's a correction back into this consolidation or smaller consolidation, it goes up, then what do you do? But based on simple price action and being a technical trader, what I want to see the market do is continue to respect how structure is built. That means that if the market is continuing to respect this range bouncing from ceiling to floor, I want to see the market get back down here. That's my plan number one, okay? Now, does it need to? Nope. Do I care? Nope. But would I like it to? Yep, if I'm looking for a trade, okay? If it doesn't play out, I'll move on. Next, I want to continue to see price create in structure, which means structural highs, structural low highs, and then based on a sell bias approach, I'm only selling the market once the price pulls back, creates a lower high, and then look for that continuation. So this will be my plan of action with GU. And again, this lasts for about 24 to 48 hours because the market is constantly trading. And as traders, intraday traders especially, you should be looking to do your analysis every single day. Okay, just in case there's some like news that totally disrupts the structure of the market and you need to reevaluate and reconsider what's happening in terms of the momentum and behavior, then it's always wise to redo it. It creates good habits. It stops you from being a lazy trader as well. And also at the same time, it gives you an opportunity to reflect on what the market is doing, sharpen your skills, and just allow you to be a bit more aware and conscious of your approach to the markets and how the markets actually move. Okay. Now, this is something I'll look for. Okay. Will be my plan with GU. I think I've dissected it enough. I like the behavior. If it breaks back in, then oh well, we move on. But if it starts to respect structure, then all well and good. And then we might be saying, well, Rox, what happens if the market continues to rally down? Well, then guess what, George? The market is continuing to rally down and I don't get into a trade. Or I can scale down to my 5 minute or my 1 minute, apply the same approach as I do with all time frames, and then see if I can get in a momentum trade, looking for some 50% retracements, continuations, double top patterns, whatever may form to look for this structure. But this was a low that was never broken. This was a high that was never broken. Momentum is shifting. There's no reason why we shouldn't continue to shift back down to some of these lows. So that's my analysis on GU. Now, we're going over some of the same pairs really, to be honest with you. Let's move on to GJ and let's take a look at this from a 4H perspective. Oof. Okay, so it's really interesting for you to observe this, and you might be saying, well, Rox, why are you talking about daily highs and daily lows? Well, look, let's take a look at this a second. This was the previous day's high for how long? For a very long time, right? We can see price was failing to break it. So this was all the way back on the 11th, which was a Friday. Monday, Tuesday, Wednesday, Thursday, Friday. Price never crushed these previous days' highs. Now, we see here that we had what? Previous days' lows. What happened? Well, we had a strong breakout of this. We wasn't able to maintain that continued bearish sentiment. We broke back in, but then look, price continued to form a lower high formation and a continuation break to the downside. Now, did we continue to break the previous day's low here? Well, no, we didn't. But look at the momentum of where the market is going. It's really strong bearish at the moment because we had a hesitation here of price breaking out and breaking back in. Again, could have been news, but we had price maintaining this structure in terms of being more bearish, more bearish bias than bullish. And look, we created a low high formation of the previous structure and broke through it. If we go back to pound USD, look what we have here. Price failing to break these highs. We have a similar breakout, break back in. Then we have price not creating a lower high on this structure, but we have strong momentum down. So we have two pairs here, which obviously very much correlated or near enough. And we can see the behavior is illustrating the same thing across both pairs. Now, we're not making this up because all we're doing is we're highlighting how structure is forming. Now, we didn't get a lower high forming on GU, but we do here on GJ. And this might be a sign. Is the pound weakening at this moment in time? And if so, then for those that do fundamental analysis, you may know why. But for me, as a technical trader, I can see what the behavior is and how the structure is building to form enough evidence to say, I know what I'm looking for. Does it mean I'm right? No, just a disclaimer, because I know there's some of you out there that just, got a lot to say about technical traders and making stuff up. But again, the markets build structure that develop almost identical every single day, slight different variations, and that's what I stick to. Keeping it simple, trusting the process. What's my plan with GJ? Well, let's go back to this concept. As long as price stays below this brick wall, I'm good for sales. Does it mean I'm going to sell it straight away? No. Well, we highlight that already in the beginning on EU. But if the market pulls back, because I'm never selling the market in a push phase into some of these key levels, remaining below this brick wall, and also at the same time creating those wick rejections / pin bars, engulfing candles that you'll be looking for, I'd be very happy to take a sell back down to the daily lows where I know price will want to target, and look at the range, 92 pips. How would I get into this trade? Well, scaling down opportunities. You all have your own strategies. So I'm just highlighting key levels here. Wait for the market to pull back. Never sell in a sell by structure. If the market does push down, then we miss it. No, we don't. We just didn't take the trade. We move on and we look for another opportunity. That's my plan with GJ. Next pair we'll take a look at is Euro Pound. Now, I'm not sure why my students love this pair so much and always make me analyze it, but there you go. All right. The structure of this market is not clear, but I will tell you something here, a few factors you can consider, and you should always do this with your analysis, okay? Previous day's high. Now you can see the market has attempted to break it, but has failed. Now that doesn't mean that this is an end to that attempt. We could still continue up big time. But what we can see at this moment in time is that the market is failing. Now, the previous day's low, which is here, the market never got back to at all. You know, we had a full 24 hours worth of data here where price just sat for a long period of time and then never broke above. Now, all of a sudden, what happened? We had a strong explosion to the upside. Now, correlate this with GU and GJ, and now think about Euro Pound. If the pound is weakening with Pound USD and Pound Yen, and now we sat in this consolidation, let's say as an intraday trader, for a very long period of time, and then eventually we broke above it, what is this signifying or potentially signifying to us? That we could be continuing this bullish run to the upside, right? Even though we've not taken out the previous day's high, there is a strong chance with the behavior of how the market has exploded that we could continue up. So with that information, what I personally would do, and again, this is of my own opinion, guys. I keep throwing this disclaimer out there because, you know, just don't shoot the messenger. I'm only here to just throw out principles and give you ideas, and then it's for you to go and do your own research and back testing and collecting your data. But based on the behavior, I know we're failing, but I personally think this level is a very obvious sell level in the market where I can imagine sellers are thinking, well, now look at this. The trend is down. We have this pullback, lower high, double top formation. And then potentially it's an opportunity for us to get into a selling opportunity, stop loss above structure, target back some of these lows. Now, I mean, this is a great idea. And if you took this trade 100 times, then guess what? You're more likely to be profitable than you are to be a losing trader. So it's not a trade that you can't take or cannot take, if can't's not a word, you cannot take. But based on the behavior of price sitting in this consolidation for a long time and then finally breaking it is significant enough to say you may not want to be jumping into sell straight away. So what would be my plan of action if I was looking to sell this at this key level? Well, first things first, let's identify what the structure is doing here. We can see that for a long period of time, and we're talking about 1, 2, 3, 4, 5, 6, 7, 8 hours or so. Let's just give it one more, 9 hours or so. The market was doing what? It was moving sideways, okay? It wasn't breaking to the upside. It wasn't breaking to the downside. Immediately, we had this explosion. But this move to the upside had highlighted a lot of bullish pressure, meaning that at this moment in time, as long as price is above this brick wall, guess what happens? We only look for buyers, right? So what would I like to see if I'm going to look for sells? Because we're not taking out this previous day's high, I want to see the market show signs of bearish momentum, look for a pullback into these levels, and then look for a continuation. Now, I don't need to be first in here as a lower high or a double top. I could look for trades on the way down once price breaks this structure down here. And then, yeah, look for trades once the market changes this push to the upside and turns bearish. But as I said, I think my first plan of action, just being brutally honest with you, again, is that I am going to be waiting for this to happen. For me, it sounds more reasonable, and that is to see this high being taken out. And once this high is taken out, I'll be looking for this retest and then a continuation. What would I be targeting? Well, more than likely, you know, a major high in the market. Price would like to gravitate towards this. Let's say sellers are in the market, stop losses are above. Let's get some hunts and see what the banks want to do. But for now, I think this is enough. On Euro Pound, if we get a trade here back to these highs, it's only 30 pips. But that means then my plan of action would be scale down to maybe my 15-minute or 5-minute time frame, take advantage of a 4, 5, 6, 7 pip stop loss, and then target some of these highs for a very simple or easy 1-to-3 risk reward ratio trade. So that's my plan. Just so you know, I've not covered all angles here because I'm not looking for sells. I just mentioned that it wouldn't be wrong if you did want to look for a sell, and I gave you an idea and a concept that you can use to take advantage of that sell. Me personally, based on behavior and structure, how the market is moving and responding at this moment in time, again for the next 24 hours, I would like to see a break of this high, get some of them stops out, look for those retests, and then look for that continuation to some of these major highs here, eventually up here, and eventually up here if we do start to take them out. Okay, so CAD Swiss franc just saved me talking a whole heap. Look at this. We see the market is ranging. So first things first, when you come to the charts, always look at your charts from a 12-year-old perspective. What is the market's doing? If it's failing to break any higher lows and it's moving sideways, then guess what? Get away from it. Euro yen, I absolutely love euro yen. Now, what's the first steps? Well, let's take our previous day's high, which was up here. This won't be valid, actually. I do apologize because we're moving into the next day. So this will be the previous day's high around here. Then we'll take the previous day's low, which is in and around this level. So we're still working with the same levels here. And then now we'll take a look at the overall directional bias of the market, which is clearly down. We're putting in lower highs, lower lows, potential lower highs. At this moment in time, we're failing to make that new lower low at the moment, which is completely fine. But what's easy to see is from a price action perspective is that taking the highs and the lows away from the key levels, where is the market sitting? In the middle of nowhere, right? Now, if the market is going to continue with this range, we should see price get back to some of these highs. If the market's going to continue in the downtrend, then we should see price respecting the previous lower high. And then we should see the reaction we need to see the continuation down. But just understand one thing. If the market is starting to form a consolidation at the bottom of a downtrend and you see price failing to break the lows, there's a strong chance that there could be a reversal in play. Maybe not just yet, but there is a strong chance. So just a little something for you guys to think about. When the market creates a high and a structural low, and you find that price taps a level once, comes back to the lows, comes back to the highs, and then attempts to tap it on the second time, this is classified as a range or an early sign of a range. Now, you can trade ranges, as I've mentioned before. You can sell the highs and buy the lows if given the evidence. You know, there are range-bound traders that trade like this for sure, and you can make a lot of money. The thing is, though, if you take a sell from the high or a sell from the low, and the market is going to continue in that trend, you will be stopped out, which is completely fine. I mean, I guess it's part of the numbers, so you will lose. And that wasn't the point I was trying to make here. The point I was trying to make here was what? Range-bound trading. Yes, this is it. If you're planning to trade with the trend and you see the trends making lower lows and lower highs, and you start to see price tapping once and twice, then guess what? There is a strong chance that this will consolidate. Okay. Do we have the two taps here yet? Not yet. We have two at the lows, one at the high. So if at this moment in time price doesn't respond to this and continue that momentum down, it might be worth just letting this go for a hot minute and look for some more cleaner structure. Because if you look back to some of the evidence here, we had this exact same scenario, building up. So tap one, tap two, and then look what happened after tap two. So just to highlight that for you, we have here on this structure, tap one, tap two, tap one, tap two, and then look what happened. The market just moved sideways. Now, this is completely fine. I mean, we know the market's going to do this, but sometimes you just want to wait for cleaner structure. Look how price then finally broke this, and how could you trade this? I mean, to be honest with you, it's looking like dot to dots now, isn't it, with all these arrows? Let's remove it. Let's just say now, you have this range, and you're looking at this range, and you can see price is failing to break highs and lows. How could you trade this? Well, as an intraday trader or a day trader or even a swing trader, you say, well, we consolidate and there's no real directional bias. Price is not breaking the highs, not breaking the lows. And then finally, we had this breakout of this structure here, strong momentum down. We can also add confluence to this based on the lower time frame structures where you see price trading, making lower highs and lower lows. And then you can scale down to say, let's say your 15-minute time frame. Once you identify price breaking the structure with a strong momentum, what can you start looking for? Well, first things first, the same approach as the higher time frames is mark your highs on the structure. Then you mark how the market is moving in terms of the trend. And as you can clearly see here, we're trending down. And then you never sell the lows, you never sell the highs, or sorry, you never buy the highs. You always wait for the pullbacks. You can look for your retests. You can look for price to break some of these key levels, these brick walls. You can look for price to come back into structure, retest structure for your retest. You can look for price to create strong momentum, key levels where price is respecting, scaling down to your 5-minute time frame. Then you can start looking for the price to create some sort of double top patterns. You can do so much here, guys. Okay. Where did this all stem from? Well, it stemmed from the market sitting in a consolidation for a period of time. And then guess what? Eventually breaking it with strong momentum and then just scaling down, looking for those trend trading opportunities. So what's the hype about here? Well, look. We have one tap at the top, one at the bottom, and then a second one formed. Now we're coming to the highs. If you're unsure, then guess what? Stay out, wait for a clear break, and look for a new opportunity. The next pair we'll take a look at, and I believe this is the final pair here, which is USD Swiss franc. Again, another pair that my students like that I'm just not sure why they like so much. I find this pair so wicky, but they asked me to analyze it, so let's do this. Let's look at what the previous day's high was. So the previous day high was here. Previous day's low, which will be today's low, is here. And now we can see an area in the market where price was failing to break above for a long period. We have 4, 8, 12, 16 hours. I mean, I know there's more down here, but we have 4 attempts accumulating 16 hours worth of data of price attempting to break and make a new high. We failed to do that. As some confluence to this in terms of the structure of the market, we can clearly see prices trading above this brick wall, making new higher highs and higher lows. We also have on our side a momentum shift here, which is indicating a final break above this level after failing to do so for about 16 hours worth of data. And we have a momentum shift. Scaling down as an intraday trader, we know that this trend now is turning from being sell bias to now failing to break some of these structural lows, to then turning its attention to a potential high-low formation, so trend up. Then we have confluence on our side, which is a key level, which sits in and around here, which was the break above. We have the momentum, we have the brick wall, we have the fail to break. So my plan of action for the next 24 to 48 hours on this pair is to see price come into some of these levels here for a potential retest, because I'm never buying the highs. Pull back into some of these key levels here, so this still remains fairly strong for at least a stop loss level, and then see if we can have this continuation run back to this high. And that's how I'd like to see USD Swiss franc, just keeping this one simple. Trust in the process, baby. So I hope that was useful. I hope this has given you some insight into my thought process moving into next week. Now, what I'm telling you now is of my own opinion. It doesn't stand as financial advice, and for sure it's not a signal. Just remember, guys, to use good risk management. This is a patient game. Those that are the most patient will be the most prosperous. And I can promise you that. Everybody's looking for that quick rich scheme overnight to make money and get out there 9 to 5. But if you rush, unfortunately, you're only going to fail yourself. So take your time, focus on yourselves, focus on your journey, apply yourselves properly, guys, and you can get the success, and ladies, get the success you're looking for. You know, with such amazing opportunities that the markets provide, almost unrealistic, dreamable opportunities that the markets provide, you can't expect to get those results overnight. But if you put in the work, I can promise you'll be out of your 9 to 5 sooner than you think, and you will be reaping the rewards of your hard work. So anyway, if you enjoyed this, make sure you smash that. If you enjoyed this, please smash that like button, subscribe if you haven't, turn on notifications. Have a fantastic trading week until next time. Take care.